Hello, everyone. Welcome once again to this Financial Freedom Thursday. My name is Immaculate Businje, and as always, I'm always grateful to be here in this space to share with you, to learn with you. Specifically today, we have a very interesting topic, the perfect gift of life for juvenile. And we are very, very privileged to have a passionate mother here, Miss Happiness Witonze, a passionate mother, a financial professional, and an AI consultant whose work bridges finance, technology, and innovation. Her insights will guide us on how to equip our young people with practical tools, financial discipline, and the mindset to achieve lifelong independence. So stay with us, Miss Happiness Witonze. Please take us to this journey on how we can prepare our young generation to financial freedom. Welcome, Witonze.
Thank you. As she was saying, this is a very important um, session or meeting where we discuss finance, especially in our communities. So thank you everyone for taking the time to join us and explore this idea of finance. So today I want to share something truly special, a way to give our children, our grandchildren, a financial head start in life. We often hear about the Trumps, the Rockefellers, they're rich, their families are well off, and we're not sure how they got there, but this is one of the ways that they use to set up their lives, their children and grandchildren for a better life when it comes to finance. So we often think life insurance is only about what happens after we're gone, but truly it is also about living and living better and smarter right now. So life insurance isn't just about death benefits. It's about life, it's protection, peace of mind, and a powerful way to build wealth while you're still living. Today, we explore how life insurance, especially IUL, how it helps families protect their loved ones financially, and they grow cash tax value free and access funds when needed. Um, I recently became a mother, and I noticed my mindset has completely shifted. Now I'm not taking time or not spending money on shoes or dresses or clothing or buying a fancy car or, traveling. Now my mindset is more of like, how can I make the financial benefit? How can I make money and also make sure my child is set for life, not just for just college, no, but to make sure whenever she wants to start a business or whenever she wants to buy a car, I can help her. I was privileged to be given by my parents a head start in life. They were able to pay my college, but after that, I had to struggle with work, with getting a job, paying rent, and all that. That is what they could do with the knowledge they had, and they gave me this knowledge. And the fact that they were able to give me those tools, I want to use these tools to better the next generation. So, which is why I have looked into a lot of products, and the most beneficial product that I've seen out there is IUL, which is Index Universal Life. Um, it's to me, it is a perfect gift of life because it's a gift that keeps on giving. So it's you give your child a gift today, tomorrow, and generations to come. So the perfect gift of life, it doesn't just protect your family, it helps you grow wealth, access funds when you need them, and create a lasting legacy for your children. Today, I'll walk you through how it works, real examples of how families, young mothers are using IUL to build generational security, and why it is one of the smartest financial tools available today. So before we jump into the presentation today, I want to share with you a testimony of a mother. Her name is Nicole. She will show you or tell you how she used IUL. So I'm gonna share my screen real quick.
Hi, I'm Nicole, mom of three. When my hours were cut at work, I didn't know how I'd pay for my son's therapy after his accident. Getting the IUL policy was the best decision we ever made. It covered his therapy and gave us such peace of mind.
Yes. So this is a story of a mother. Her name is Nicole. Her child got into an accident, and then she was able to use the policy to help in paying her family bills while she was taking care of her child. So these are the things we're talking about today. This is what IUL can do for you. Why is IUL the perfect gift for our children? Like Nicole or like me, IUL is the perfect gift for our children because not it helps in different ways. Um, it can pay for our children for college. It can boost. It gives them a financial head start in life. Um, it can help them. You can help your children get cars. You can help your children even buy a house. And this is a, like I said, this is a gift that keeps on giving. It is a gift that you give your child today, and it's a gift you give your child tomorrow and generations to come. This is how generational wealth is kept in the family. So how is IUL? What's happening with my computer? Okay, so we're going to look at the benefits of IUL, or six major ways it is beneficial, or it can benefit juvenile. One, it is easier to get. This means when your child when your child is younger, then they're prone, then they don't have diseases, they're not sick, so it is easier for them to get approved. So it's easy for them to get the life insurance because they don't have any problems. But as they grow, things can happen. They can get sick. I'm sure every mother or person who's here has seen a video or has gone to the hospital and seen children who are sick. So children can also get sick. So as soon as you sign your child for the IUL, it is better because it's easier for them to get approved. Number two, it is cheaper. So insurance costs less for the kid, leaving more money to grow. That means if I sign my 9-year-old child today, it's cheaper first of all, and also there's a long period of time where this money can grow. Also, another thing, there is small payments, which the premiums. So if you sign your child when they're younger, they'll pay a lower premium than when they get older. So you can start with low payments and then adjust with time as depending on how you want to grow your policy. Also, money, there's growth over time. The money inside grows safely and can't lose value when the market drops. So we know what happened in 2008. So we don't want that to happen to the money that we're investing in our children. So with this perfect gift of life, it is protected, meaning that the money is going to grow and will not be touched by any problems that happen economically in our world today. Also, it is a tax-free saving. When they retire, they can take money out of the policy tax-free. And also, they can also benefit from early retirement because if you invest in them when they're still younger, so they have acquired all this wealth. So retirement to them, it's earlier, it's sooner than someone an older person who invests later in their life. Also, there's living benefits, just like Nicole. She was able to use the living benefits to pay while she was taking care of her child when she was sick. Um, so parents and grandparents, this is a way, this is a gift you can give to your children and make sure that they're set for life and grow wealth. When we talk about generational wealth, you might think, maybe it's not for me. But this perfect gift of life, the IUL, it gives you the ability. This is how generational wealth is built. This is a way for our communities, for our us as Black people, as Africans, to build that generational wealth. It includes us in building generational wealth. So when the child takes over the plan, they can add more money. So this is another benefit to this. They can add more money. So as they get older, like I mentioned before, they can pay low cost now, and then as they get older, they can add more money to their policy. Hence, creating more money that can help them as they navigate through life. So in summary, IUL, you start younger, more money grows over time, protects the child with life insurance coverages. It grows cash value safely and no market loss. It offers tax-free saving for the future. Gives access to funds while you're still alive. That is very, very important because other life insurance products, people can only use access the funds when they die. But IUL or this perfect gift of life, the child can access the funds while they are still alive. Maybe they want to get married. I mean, you can use this money to pay for the wedding. Maybe they want to buy a car. You can use this money to buy a car or even start a business. My goal for my daughter is for her to use this money. As I work hard and focus on making money, I want to make sure that I provide her this gift that will help her even when I'm gone, and also that can help her with her children. So to me, this is why I am very passionate to when it comes to IULs, because I know that when I'm gone, my child will not suffer. So thank you so much for listening to me while I talk about this very topic that is very passionate and dear to my heart, because my daughter has changed everything in my life. She has completely shifted. So it is very important to me to share with other parents, other mothers out there, the benefit of this IUL or the perfect gift of life. So I'll give the floor to questions or comments or any additions. Thank you so much.
Oh, thank you so very much, Miss Happiness. Yes. That is true. So when we talk about those perfect gift of lives, we would say a perfect gift of life should symbolize, it's like equipping the next generation with the tools to inform, for them to be informed or confident in financial decisions. When it comes to those young generations who are able actually to step up themselves and start saving, even when it comes to the younger one, the little ones who are not yet able to do that, that is when we call the head start. We help them to step up. By the time, instead of buying those expensive toys, expensive clothing that they are going to wear a few months and then they leave them behind, or even buying expensive, cars. Yes, it is good to give our children those fancy stuff, but wouldn't it be better for us, for them actually to have that financial head start for them to be able to live on? That was a good discussion and an eye opener, mostly for parents and grandparents, even for people who are not parents yet. This is not just about people who are parents, even people who are thinking about having children. These children will need where to start. So thank you so much, Happiness. We'll open up the floor for everyone. As always, this is supposed to be an interactive discussion. When we have someone presenting, yes, but all of us are supposed to come in. We have questions, we have something we have to say about the topic so that we can learn together, because this is a learning experience for everyone. As we share, we learn more. So the floor is open. Thank you.
Thank you so much for the concise and clear presentation. I have a question. So how would you advise a parent who is considering putting money away in a college fund for their kids versus starting an IUL policy for their child?
Happiness, if you don't mind, I can chime on that. Yes, thank you so much, Dr. Shawn, on that one. Yes, there are so many tools out there. Obviously, we are not saying that Index Universal Life is the only tool but it is the perfect one. So when we talk about Courage Fund, which is what we call 529, which is always set aside for children's education, or Courage Fund, as we always call it. So the difference is, for people who may have like the Courage Fund or the 529, that is specifically just done for money for courage. You set aside that account. You can use it. You can open it in your bank. You can set it up in your bank. It is only going to be just set aside just for courage only. That money, it is going to it can always go towards courage payment. If you're lucky and your child happens maybe to get a scholarship, that money is not transferable. It is for that child. And if you happen to want to withdraw it, you're going to be hit by actually a fees to get it out. But the difference with IUL, you kill so many birds with one payment. Your child is protected. Like Miss Happiness was saying, getting sick does not see age. Even God forbid, someone passing does not see age. But what is even better is that financial planning, generational wealth creation. When it comes to an IUL, if you can start your child early, they can use that money in different ways. One, they are protected. If they happen to get sick, God forbid, they have living benefits. God forbid something unthinkable happens, they have death benefit, and they have actually the investment. So that money, it can be used for education. Remember, the 529 was only for education, but IUL money can be used for everything. Like an example, Miss Happiness was showing for Nicole. Her child got into a car accident or whatever accident it was. The mother was able to use those living benefit funds to be able to stay home with her child as she was taking care of the child. But if this was for a 529 or a college fund, you can never ever touch that. But IUL is very, very flexible. You can use it today if you get sick, tomorrow if someone dies, or even investment to buy that first car for the child, to pay for their college, to even pay for their home, depending on how well you planned it. So those are the difference. They're all tools, but different tools work differently, and the advantages are different, obviously. Thank you for that, Sharon.
I want to add on, say something. I mean, we said we emphasized on starting our children early. Maybe some parents might think, oh, my kid is maybe it's 15 years old, so maybe no, I can't enroll them. No, it's starting early makes a difference, yes, but not starting is worse because you don't know what can happen. So making sure that your child is making sure that you're giving your child this perfect wherever stage of life they are, it is very important because you never know what can happen. Yes, we do have we all know kids don't get we think kids don't get sick, those serious sicknesses, but you never know. Like I said before, we've been to the hospital, children's hospital, where kids can't walk, they're on this breathing machine, on all these things. So that shows you how life can change in just a matter of a second. So making sure your child is insured, whatever age they are, making sure that they're insured, it's the best thing for you to do for them as a parent. And that's why it is called a perfect gift. Because whenever you sign them up, they start to accumulate that wealth that they can use in the future. Thank you. Any more questions or comments?
I'd like to make a comment. Thank you very much, Happiness, for the presentation. I think that when we talk about having financial freedom and peace of mind when it comes to finances, especially for a young family, it's not always about having savings in the bank somewhere so that you can always get to them, but it's also knowing that your money is in a vehicle where it's working even when you're not working. So it's growing. Whatever you put in you're going to get out way more than you put in. A lot of the other vehicles out there, people that think about savings accounts that only give you less than 1% a year in interest, and yet inflation is above 6%, that means after 1 year, your money has lost value. Your $100 today is not going to be the same $100 in terms of purchasing power a year later if you leave it in a savings account. But if you think about this vehicle where you're investing and the money is growing over 10%, that means that even if, obviously, this is a recurring premium, but if you approach one of these financial advisors, they'll show you an illustration that shows you how fast your money is growing. So just by you putting a little bit on the side, it's not just that you're building a savings bucket, but that money that you're putting aside is actually working for you way harder than, you might be working even in your job, because nobody gets a 10% raise every year, unfortunately, in this economy. So I just wanted to mention that for people to think about that, like financial freedom is really, the rich, their money is growing at an incredible pace. And that's how they're able to amass a fortune to pass down.
Thank you so much, Collins. That was brilliant. So I believe last week we had we talked about misconception or the myth people usually have during within these tools or life insurance in general, whereby this perfect gift of life for juvenile happens to be the index universal life. So when if we can try to take away the misconception or what actually stops us from thinking about this, planning is always good, And when it comes to our children, normally, when you have a child as a parent, there should be a plan. A plan how that, I'm talking about children now because this is the topic Miss Happiness is discussing. Children needs a lot of planning, and planning cannot actually happen overnight like everybody's discussing. It's something you have to think about and be intentional on it. And mostly parents, really, it is our responsibility to make sure that we are the first financial educators of our children, live on educating them when they are old enough to understand, but even laying that stone for them, knowing that they have where to start. When we think about life insurance, it's not about dying. That is where the misconception is, where people think like, oh, my child is a child. Why do I need life insurance for them? This is actually financial planning. This is an investment for your child, even in knowing that this child is protected. So whether we think about it or not, we cannot ignore the fact that this is very important, and it is always going to be a necessity for the family to make sure that protection, family financial planning, that generational wealth, it is going to go way further when the child grows with something set aside for them. We can say we work hard to save money, but we all know how that money goes when we save it in just regular accounts. That bank account is going to earn you 0.0 something. Even if you put it in a high yield investment like a savings account, you're not going to get more than 3-4%. But when you put the money where you put it and you're able to get protection plus savings plus living benefits, there's nothing that beats that for our youngsters. And we can see, we always tell people, talk to a financial professional before you actually think about whether it is necessary or not. Talk about it, explore your options, look at what that tool does to you and your family, and decide whether you need it or not. But first, be educated and informed financially. Thank you. Let's keep the discussion coming.
I am kind of curious to know the money that is contributed, where is the company investing it?
Thank you, Ruth. So we have actually so many different what we call indices. The money actually you can choose if you're someone who understands how the market works. You can actually pick where you want to put your money. We have money invested into safer indices, what we call index account. You can invest your money in gold, S&P 500, BlackRock, Morgan Stanley. We have like many different index accounts where you can actually in manageable accounts where your money is safe. So when you put a premium into your account, a piece goes into your protection, which is your life insurance. Another piece is invested. You have an option to pick where you want your money goes. You have an option as a consumer where you want your money to go, if you do understand that. And if not, you're working with a financial professional who understands where the market works. We show you how the market has been performing with all indices or index accounts, so you pick whichever one you want. So we have different ones. It's not just one market or one account where we put it.
Okay, great. Thank you so much. Is there an age limit?
No, as early as your child gets a social security, as early as 6 weeks or even less. So there is no age
Wow.
limit. Yeah, as young as less than a year, as old as whichever age you are. But again, as Miss Happiness was saying, the earlier you get a policy, the cheaper it is going to be, because these life insurance policies, if someone is 10 years old and another one is 70 years old, obviously the cost is not going to be the same. The one who starts early, they are going to be able to actually save a lot of money, invest a lot of money, pay less, because when you pay your premiums today, you lock in everything. You lock in your premium, you lock in your age, you lock in your health. So whatever happens after you lock in your premium or you lock in your policy, everything is done. So the younger you do, the better, because that is you actually sure that you're healthy and nothing happens before you get it.
I've actually heard that there could be as young as 2 weeks to qualify for such a policy.
Great, thank you.
Yeah, as long as they have a social security, they can get a policy.
What does the question say?
In case of budget constraints, what options are there to increase or decrease premium payments?
Oh, that's a good one. That's a good one. Yeah, so that is actually what Miss Happiness was discussing earlier. Index Universal Life, it is it's the most flexible actually account you can ever find. So you can start less, you can start low and increase. You can start high and decrease. We have what we call, actually, you can decide to say, it is always easy to start, but what you can start paying, let me say $200 a month, and then life happens. You're not able to actually make what you're making. You have an option to decrease, even to cut it into half. Pay $100, even stop paying, because with the Index Universal Life, you have cash accumulation into your policy. Let's say you had your policy for a year or two. Something happened, you lost a job for 6 months, you're not able to work. Guess what? Your policy can sit in for over a year without you paying anything, and your policy is going to be intact because you have money in your policy. So with any issues, if you happen to have any budget constraints and you're not able to pay full premiums, you can actually be able to reduce, because these policies are, again, very flexible, and you can as well increase. If you say, I started with 500,000, I want to increase to $1 million, you can just go ahead and increase your policy as you wish. Thank you for that question again.
So basically, the money that you could be using for your living benefits, you use it to pay for the policy. If life, when life happens. Those
are good questions, right? That's why we are here every Thursday, to learn together. Because these are the same questions actually that stops people from taking these policies, because they think, yes, I have money today, but what will happen tomorrow when I'm not working? Or if I lose my job, will I lose my policy? No, you don't. Depending on the one you took. Obviously, if you took a term life, because a term life is like a car insurance. When you miss payments, they are going to cut it. You're going to lose it. But with the index universal life, you have investment in that, which will fuel your policy if you're not able to make payments, because you have cash in there. You could choose to take out money and pay, or you could actually choose, the company can use it to keep your policy running. It doesn't have to be questions. We can have people also give us their experience. If you have children, what tools do you use? We can do comparisons and see, what do you use to actually save for your children? Do you have any accounts you have now for your children? If not, what are the options that you have?
We have another question. Can you talk a little bit about FEG and their credibility to help people understand?
FEG is an agency. We work with insurance companies under FEG. So literally any company that is allowed to sell these products is credible. It has to be certified to do that. So FEG happens to be an agency that has so many life insurance companies that works with it, but they pick the best of the best. We have Fidelity and Guarantee. We have American National. We have so many. So that is the beauty of actually working with FEG, because we have different options. Not only the different options in the product you take, because we have the index universal life insurances, we have the term life, we have final expenses, we have annuities, we have different kinds of products given by different carriers. Carriers which happens to be insurance companies. So we don't have just one company to work with. We give our consumers array of options. You love a company, you work with it. We can advise the best one, but if you need any company that you feel like this is where I want to put my money, we have different options. So I don't know if that is what you meant by credibility, but yes, all the companies we work with, carriers are very credible, and actually everything is out there. Before you pick your policy, you cross-check with the companies we have, and you see if you love them, because everything is out there. You can verify. Anybody can verify.
I wanted to emphasize on another thing that I think when we were talking about Nicole's story. So there is ownership transferring. So which means you start it for them as a parent, obviously paying their premium, and then you pass it on them when they are older. So it's also teaching the kid financial responsibility. So they see you doing it, and by the time they get older, they understand how it works. So it's not just paying for them or saving money for them, of course planning and all that, but it also gives them a sense of financial responsibility, because now they're continuing what you started for them.
I'd like to also make another comment. There's a lot of people never realize that your IUL isn't just an insurance policy. It's actually an asset that can strengthen your financial position. Once your cash value grows, because the policy is split in two. There's part of your premium goes to covering your life insurance, and the other part goes to cash value accumulation. Once your cash value grows, lenders can view it as a collateralizable asset. So what that means is that you can borrow against it directly through the policy without any background, any credit check. You don't need any approval process, and it doesn't even impact your credit score. So you can list it also as part of your net worth when you're applying for a mortgage or a business loan. So because it's a guaranteed value asset and it continues to grow over time. So in some cases, a lot of people actually, you're sitting there and waiting for permission from banks to use your own money from the bank. But you've been building an account here in this policy that gives you permission straight up. And your IUL can turn from an insurance policy into a line of credit. by what if you choose.
We have a question, I think, in the chat. Immaculate can just say that with universal index, in case you are temporarily not working, the insurance can be using what you have in your account value. My question is, when can you be eligible to use that money from from when you open the account to when? I think they're asking like when can you use the money depending on when you signed up for the policy. Like can you use it immediately or there's a certain time you have to wait to be able to use the cash value?
Perfect. That is actually a great question right there. So yes, so when you open your account, you earn those cash accumulation. So it's like annualized. So every year they are going to add or they what we call increasing or whatever. What you earn, the cash accumulation you earn every year, it is going to be added on what you have, or what we call net death benefit, or what is just a standout, what stands there as what you earned. So what you earn, depending on what account you open, in Index Universal Life, we have different options. You can pick a product whereby maybe we have, like in the fidelity that I work with, we have three options. You have gold, a gold product. We have freedom product. We have actually what we call where you put all your money just for investment, what we call maximum accumulation and income. When you do a maximum accumulation and income, meaning that your focus or your goal is just to invest, not to have more in death benefit or protection. You have your money starting year one because again, every family has a different financial need. If I come in and all my focus is just to save, and I pick the maximum accumulation, you maxing your IUL, you have your cash accumulation or surrender value starting year one. If you pick a product that is a balance between protection and investment, you have at least, depending on which one you took again, because we have different ones, you have like between a year and 2 years before you can access cash. But there is a difference between cash surrender and account value. Account value is actually added on every year. Year one, you have that account value, that cash that you accumulated. If something was to happen to you, you access it year one. If God forbid you have a terminal illness or something, a death, you access that because it has been added on your net death benefit, but you cannot just withdraw in the first year or second year, depending again on the account you opened. That is why this is a general discussion here. We always encourage people, speak with a financial professional to see which policy you want and how soon you'll be able to actually access your money. And with them, whichever product you take, by the way, it depends on how much you're putting in. If you overfunding or underfunding your IUL, you want to be able to access your money quicker because what you're saving is little compared to what you're paying towards your death benefit or your benefits. So always speak to a financial professional, look into your particular case to show you exactly, because every person is different. I may pay 200, the other person pays $1,000 a month. That person might be able to access their money right away, year one, when someone who is paying only $200 will have to wait for 2-3 years before they can access their cash. I hope that makes sense, but what I can say, every financial need, family financial situation is different. Speak to a financial professional once again so they can look into your particular case to show you exactly how that account is going to work for you. Thank you. That is actually a great question there. So, example, if you signed up for for a gold, again, we don't know how much gold you're putting in. So it will depend on how much you're putting. Are you supercharging your IUL? Are you just putting a minimum of premium? Are you overfunding? So depending again on what, you can be picking a gold when you're doing maximum accumulation income, or you just, depending on what you're picking. Gold is gold, freedom is freedom, or max is max, but depending on how much you put in again, it will give you an opportunity to take out your money sooner or later. So I believe we can sign up for a one-on-one so you can see for your situation to see happiness. You can put your number in there. or even myself, so we can give you a one-on-one so you can see for yourself what you need and how that works for you.
So thank you so much, everyone, for joining this important session of finances, and especially how we can empower our children while they're still young. So starting early is the key. A small step today can create a lifetime of financial security for your child. The perfect gift of life isn't about how much you give, it's about how wisely you start. And let's build something that grows with them. So thank you so much, everyone, for joining. Hope to see you again next Thursday on another financial topic. Thank you so much.
Thank you. Thank you. Well done, Happiness. This was great. And thank you, everyone, for your participation. This was amazing.